Hello, guys, and welcome to your market report for Tuesday, September 4th, 2018. I'm going to tell you what, I'm going to get right into it this morning. You guys out there who have bought physical gold and silver, I see a little trend developing here. You guys could be the biggest winners. Really, if this new trend that I've seen this morning develops further, you guys could be the big winners. I'm telling you, you could be really big winners. Winners with a capital W. Okay, so I'm going to get right into it after these little musical interlude or whatever. We're going to get right into the show. Hello, guys. Welcome back. First, I'm going to talk about cryptocurrencies a little bit because Bitcoin is making some moves. Okay, but then I'm going to talk about silver. And the reason why is I'm a little bit excited here. I'm a little bit excited this morning. I'm a little bit excited about silver. A trend's developing here, and really, honestly, if it completes what I think could actually happen, silver and gold, guys, could be big winners. And we're going to get right into it. First thing we're going to do is open the charts right here. Now, next thing we're going to do is take a look at cryptocurrency first, because cryptocurrency is moving pretty good right now. She's been on a trend upwards. She's at $7,366. She's doing pretty good. The mark that she's got to break is 8,500. If she goes above 8,500, then the bull market is beginning again. If it falls off now, anywhere below 8,500 now and starts to fall down, it'll probably fall down to at least 6,000 again. It's going to present another good buying opportunity in cryptocurrency. Cryptocurrency needs to build out its infrastructure, and believe me, it's building it fast, before it can really start to achieve success. But if you wait to buy cryptocurrency by the time it's built its infrastructure out and is starting to achieve that success, you're going to have to pay many times more than you can pay if you buy on these dips right now. And so, enough said about that. Cryptocurrency market capitalizations, $239 billion this morning. We got some good coins that are really good movers here in the market. We got Bitcoin dominance at 52.9%, and some of these movers are like Litecoin. She's moved $68. She's $65 yesterday, $4.75%. So imagine one day if a guy's going out and he's buying these U.S. Treasuries, he's going to make 3%. Best case, 3%. Well, he could make, yesterday alone, he could make 4.75% if he bought Litecoin. Okay, what are you waiting for? I'm just joking around. But this is not financial advice on this show. But cryptocurrencies are the wave of the future. And in one form or another, they are eventually going to win against fiat currencies. And one of the reasons why is because cryptographic currencies are able to do things fiat currencies can't do, like transfer across the internet instantaneously. And there's another thing about it, that cryptocurrencies are all deflationary, where all of your fiat currencies are inflationary. And if you're all about saving your money, you're not going to be able to save anymore in fiat currencies. You're only going to be able to save in cryptocurrencies because they're deflationary. They're always going to go up in price continuously until they've absorbed all the wealth of the world. It's just simple. Because people aren't stupid. They're going to say, hey, you know what? Bob over there, he's been saving in Bitcoin. He's done rather well this year, much better than I have. And they're going to switch over at a certain point. Okay, so now let's take a look at the Dow Jones Industrial Average for this morning. We're down 143 points. not to be discouraged. Ultimately, I think the stock market is going to prove to be a rather good investment. I think it's going to exceed 100,000. You heard me right, because we got a hyperinflation coming. So the stock market's going to be moved upwards with this hyperinflation. The hyperinflation is going to occur after deflationary period, though. So it's going to take a little while before we're probably going to go through a crash or a deflationary spike event with the stock market going down first before it goes up, though. So don't listen to anything I said about that 100,000, because the stock market's probably going to drop a lot first, you know. Okay, so now, sweet light crude oil here. We're up 79 cents on the day. It's down 1.13%, 70.59. Now, I'm going to tell you, there's entities out there that have control over this market. They're not going to let it go too much over 70 bucks. They're keeping it in a range between 65 and 70. Watch what happens now that it's punched through 70 for sweet light crude. Watch what happens. It's going to be knocked back down to probably 68 or 67. Okay, so now the silver price. Now let's get into the meat of what I was going to talk about in this show. Look at them smack this sucker down. It's the most unloved, most smashed down, it and gold both are the most smashed down assets in the world. Everything else has went up in price. Gold and silver's been smashed down. They're putting it on sale. Now, to describe what this trend that's going on is like, I'm going to describe it as canned milk. Say you live in a community, and say you have a store like, I don't know, the stores in the States, Kroger's or whatever, or Giant Tiger, or some store, some big store, where you go and you buy your canned milk. And say they put it on sale. And say right now it's $1 a can. Normal price, $1 a can. And they put the canned milk on sale for 75 cents. You go in to get some. Well, there's still some available, okay? Now here's the thing. If they drop the price down to 50 cents a can, you go in to get some then. What's going to happen? None available. The shelves and aisles, it's going to be all cleared out. So here's the thing with silver. It's exactly the same way with silver and gold, especially silver, because it's such a tight market. There's such a small amount of the actual physical supply available for sale out there that if these prices continue to get smacked down lower and lower and lower, more and more buying is going to heat up. The buying is going to heat up. Because it's a fire sale, for crying out loud, on the most precious substance on earth. What do you think's going to happen as the price drops down lower and lower and lower and lower and lower? There's going to hit a certain point where all of a sudden, poof, it's all going to be gone, just like the canned milk. You know? And this is the trend that's developing. This is why I did that show a little while ago when I said they're going to break this market. Because if they keep driving this market down 30, 40 cents a day on something that's already extremely underpriced and undervalued, the physical's going to disappear. It's going to get bought up, and there's going to be a shortage of the 1,000-ounce bars. That's what we're going to have, a shortage of the 1,000-ounce bars. Now, at the same time, they're doing this tightening and everything else. This is why I'm saying silver could be the big winner, is the dollar's going to be going up. And the emerging market crisis is going to explode. At the same time, there's a shortage in physical silver. You're going to have all other commodity classes going down in price. Housing, the bubble will be popping. The price will be falling. Everything else, the price will be falling, because we're going into a deflationary crisis. But silver will be moving in the opposite direction because there's a shortage. So this is why I'm saying you guys could be the big winners to buy in on this. as the and get some of the physical silver in your own supply while the supply is disappearing off the shelves. Like, if the prices continue to drop like this, you're going to see how you'll start to see it is in your local coin dealers, they're going to start to run out of product. The sales are going to start heating up at a certain point when these prices continue to drop, because people are going to say, hey, you know what? This can't continue. Because if it continues, silver is going to, everything else is going up in price. Like, if you want to buy a truckload of gravel for your driveway, you used to be able to buy it. Silver used to be a lot higher price than it is now. And the gravel used to be a hell of a lot cheaper back then. Back when silver was $50 an ounce. The price of gravel was a quarter the price it is now to pave your driveway. Well, now the price of gravel's went up 4 times higher, and the price of silver's been chopped in half, or more than chopped in quarters. You keep moving in this direction, you're going to be able to pave your driveways with silver. That doesn't make any sense, though. So what we're going to see is the whole thing disappear, the silver disappear, because the price is going to get too low. They're going to break the market, and then that price is going to scream upwards, scream up. When there's a shortage, it'll scream up, because all of these companies out there and stuff that rely upon silver, they're going to say, hey, you know what? We got to shut off our production line. Apple iPhone, we can't allocate any silver, guys. Well, how are we gonna make our Apple iPhones or whatever? They're gonna panic, because silver is an awful lot of industrial applications. Silver is absolutely necessary. You can't have a shortage in the 1,000-ounce bars without these companies panicking, and they'll be willing to pay any price. They can afford to pay $200 an ounce. Apple can. Because right now there's only 60 cents worth of silver in an iPhone. Say they got to put $10 worth of silver in an iPhone. So what? Pass it on to the consumer. You think these people aren't going to buy a new iPhone because there's a difference between 60 cents worth of silver and $10 worth of silver for a $1,000 phone? They're going to laugh at it, the difference in price. So this is why I'm saying you guys could be the big winners that are buying in and getting this silver before she disappears, boys. Because if it does disappear, it's going to do it overnight. You're going to wake up some morning, you're going to wake up and look at the newspaper articles. It's going to say shortage in silver. Silver shortage. And don't be surprised when you see it. Because this has been coming on for a long time. It's been coming for a long time. A lot of us out here know that it's eventually going to happen, have been waiting for it for a long time. Believe me. Okay? Now, if this occurs at exactly the same time as we are having a deflationary event because the Fed's popping all the bubbles with their tightening, with their quantitative tightening, which is the most foolish thing on earth, then it could be a double whammy. You get the silver price going up against the dollar, right? And you get the dollar going up too in value, and everything else falling in value because the bubble's popping. Oh my gosh, the silver and gold guys could make a huge if that were to happen. Now let's take a look at bonds and rates today, okay? I just wanted to point that out. It's a trend I see developing. And I'm going to talk about our emerging markets in a minute too, but first let's look at bonds and rates. Bonds and rates are moving a lot today. I'm telling you, right now, the SH, you know what, is starting to hit the fan. Right now, and nobody's noticing it. It's starting to hit the fan. Look at these bond yields moving. The 10-year moved 6 basis points today. 6 basis points. The 30-year. The 30-year, excuse me. The 30 years moved 6 basis points today. The 10 years moved 4.6 basis points, and the 5 years moved 3 basis points. Okay? Just in one day alone. So our bond yields are starting to pop. The U.S. dollar, right? Look at the power. Look at the power. Up 0.5 point today. half a point. Okay, this is going to exacerbate this emerging market crisis. Now, I'm going to tell you what, this is going to get worse because I see a wave of deflation coming. I see bubbles popping, you know? And look at this guy here, Kenneth Raposa, Forbes magazine, okay? This is an article from Forbes. It says, State Street says emerging market currency crisis is overblown. So right now they're talking, and they're saying, the talking heads out there are saying that this emerging market crisis occurring in the world is overblown. Oh, it's no big deal, it's overblown. It says ever since the Turkish lira plummeted against the dollar this month, the word on the street has been that anyone who doesn't want to lose money should avoid emerging markets. Free falling currencies make countries' stocks and bonds less attractive. Only die-hard global or emerging market specialists dare put money to work in a country whose credit profile is deteriorating, political landscape stinks, and whose economy is a quarter away from contracting again. State Street chief investment strategist Michael Arone doesn't believe that emerging markets as a whole are in any sort of crisis. Oh my God. Is a man blind? That not only is a crisis beginning in these emerging markets, but this crisis is being exacerbated by the strength in the dollar. And this is explosive because this is not going to reverse direction and the dollar's not going to fall down in a hole right now because this deflationary spike event that I've been talking about for ages, unless the Fed backs off, unless these other central banks back off now, and they're all working in coordinated effort. The Bank of Japan, all these central banks now are the European Central Bank. They're all starting to talk taper. And the ones that are not talking taper have already went into reversal. The United States Central Bank, the Federal Reserve, has already went into a reversal, and they're already into quantitative tightening. You just can't withdraw all this liquidity out of the global system, the liquidity that was put in to stop the 2008 crisis. You can't withdraw all that back out again without recreating the 2008 crisis all over again, which was a deflationary event. So we're gonna have this deflationary event again. And what's that gonna do? It's gonna drive the dollar up. And it's going to exacerbate these emerging market crises tenfold from what they are now. So this guy, I don't know, he might have a college PhD or whatever he might have, this Michael Arone guy, but to quote him again, it says State Street's chief investment strategist, Michael Arone, doesn't believe emerging markets as a whole are in any sort of a crisis. He must have blinders on, you know. That's all I can say about it. Okay, this has been my market report for this morning. Thank you guys for listening. Like and subscribe, and we will catch you guys in the next show. Bye-bye for now, guys.